When a company drops its earnings report, you'd think the stock would react to the actual news. But what happens when the news tells two completely different stories? That's exactly what went down with Euronet's latest quarter. So in this explainer, we're going to untangle this major disconnect between a company making huge strategic moves and a market that frankly just wasn't buying it. Okay, so let's just get right into it. In the days right after Euronet released its numbers and held their big conference call, the stock dropped almost 5%. And look, this wasn't the whole market tanking. This was all about Euronet. And the crazy part? It happened even though management sounded more optimistic than they have in a long, long time. And that's the big question here, right? While management was out there painting this picture of a blockbuster future, traders and their algorithms were clearly focused on something else entirely. So let's break down both sides of this thing and see what really moved the needle. First things first, let's look at what Wall Street always looks at right away, the headline numbers. And yeah, right off the bat, you can kind of see where the market's anxiety came from. On the surface, Euronet came up just a little bit short. Now, what's really fascinating here is just how small these misses actually were. I mean, look at it. Adjusted earnings per share, that came in at $2.56. That's about a dime short of what analysts were hoping for. Revenue? Pretty much the same story. They missed by less than $6 million on over $1 billion in sales. In the grand scheme of things, these are tiny variances. But you know how it is. For a market that's priced for perfection, any miss at all can set off the alarm bells. But if you actually listened to the earnings call, you heard a completely different story. Management, they barely even talked about that tiny miss. Instead, they spent pretty much the entire call laying out these huge strategic announcements that are set to totally reshape the company's future. This, right here, is the bull case. The absolute centerpiece of their whole presentation was buying this company called CoreCard. And as CEO Mike Brown said, this deal is a total game changer. CoreCard is this high-tech platform that powers credit card programs for huge names. We're talking Apple and Goldman Sachs. For Euronet, this is a massive, massive push into the super high-margin world of digital payment software. And it didn't stop there, not by a long shot. The CoreCard deal wasn't the only news. They also announced they'd signed this landmark deal for their Ren real-time payments platform with one of the top 3 biggest banks in the entire U.S. That's a huge stamp of approval for their tech. And on top of that, they expanded their digital money transfer business with a new Google partnership and an acquisition over in Japan. Look, these aren't small, incremental wins. These are major strategic leaps forward. And this chart, it just lays out the long-term plan perfectly. For years now, Euronet has been deliberately, strategically shifting away from its old-school business of just owning and operating cash ATMs. And you can see the result right here. That part of the business is shrinking as a piece of the pie. The CoreCard acquisition just slams the accelerator on this pivot towards higher growth, higher margin digital and software money. So, with all this incredible strategic news, why on earth did the stock drop? Well, this brings us to the bear case. This is where we see that classic tug of war between a company's long-term strategy and the market's short-term mood swings. This slide really puts it all into perspective. You've got management over here talking about the future. CoreCard, the big bank deal, fantastic margin expansion. Then you've got the market over here, completely fixated on the present. It wasn't just the headline miss. Investors were also worried that expenses were climbing faster than revenue, and they spotted some softness in the U.S. domestic money transfer business, which is a key market. So it's a classic case of long-term vision butting heads with short-term jitters. All right, to really get what's going on with this business, we have to look past those big, consolidated numbers and see how the individual parts are doing. So let's peel back the layers and take a look under the hood. Okay, so looking at their 3 core businesses, you can see a really strong story, especially in money transfer. I mean, yeah, revenue grew a solid 6% in constant currency, but look at that operating income. It's up a whopping 33%. That is just huge operating leverage. The other segments grew too, though. The EFT business was up against a really tough comparison from a monster quarter last year. And here it is, the knockout punch. The money transfer business expanded its operating margin by 296 basis points. Now, what does that mean in simple terms? It means for every new dollar of revenue that comes in, way more of it is dropping straight to the bottom line as profit. That's the sign of a really healthy, profitable, and well-run business. So what's driving all that new profit? It's digital. Their direct-to-consumer digital transactions in the money transfer segment grew by 29%. So this isn't just some pie-in-the-sky plan for the future. This is hard evidence that the strategic pivot we've been talking about is already delivering some seriously strong results today. And maybe the most important signal from management was this little nugget right here. They reaffirmed their full-year guidance. By sticking to their forecast of 12 to 16% earnings growth for the whole year, they're basically sending a message to the market. They're saying, hey, that Q2 miss, it was a blip. It's not a trend. The business is still incredibly strong. Okay, so what do we do with all this? How do we make sense of it? We've got a slight near-term miss on one hand and a massive long-term strategic acceleration on the other. For our final analysis, let's look ahead at what to watch for and assign our rating. So here's what you need to be watching for in the next quarter. The big question is, can they execute? Look for progress on getting that CoreCard deal integrated. We need updates on the big U.S. bank deal. They really have to prove they can deliver on these huge promises. We'll also be keeping a close eye on remittance trends and, of course, the bigger macro picture for all fintech companies. These are the things that will prove if management's vision is actually becoming a reality. So after taking everything into account, our rating is market perform. The strategic moves they're making, especially that CoreCard acquisition, are genuinely impressive. They're positioning the company for a much stronger, much more profitable future. But you just can't ignore how the market reacted. Investors are in total show-me mode right now. The stock is probably going to trade in line with the rest of the market until the company can deliver a nice, clean quarter and show some real, tangible results from all these new projects. The big question now is, can Euronet's strategy outrun the street's impatience? And just one final, very important note. This is not financial advice. This analysis is just for informational purposes. You should always do your own research before making any investment decisions.